Welcome back. You're still tuned into Markets at Noon right here on ET Now. And Indian markets have underperformed several global markets over the last 1 year. And to understand what the outlook is for the next Samvat, we are now joined by Rajesh Bhatia, CIO at ITI Mutual Fund. Mr. Bhatia, afternoon, and thank you so much for joining us today on ET Now. And I have to start by asking you about the factors and triggers that will weigh on the markets going forward. We had Trump tariff, and it is an uncertainty which is likely to continue going forward as well. Global markets continue to remain in focus on account of geopolitical tensions. We had a lot of primary market action in the Indian markets. What will drive the markets over the next 1 year?
Sure. So just let us step back. So we've had a fantastic run since the COVID period, 2020. So 5 years since then have been very, very good. The last 1 year, we've been struggling a bit. I think the key catalyst for that, struggling has been that the fiscal deficit of the government had to contract, and that was very good because it was a very disciplined controlling of government expenditure, and that led to a bit of a slowdown. And that because of that, I think our markets for the last 1 year have not given any returns. In fact, the returns have been a bit negative. Uh, we have consolidated very well on our time-wise correction, and we are probably close to bottoming out as far as earnings is concerned as well, because there are a host of measures that the government has taken. GST reduction, 100 basis points reduction in interest rates, taxation benefits to people who earn 12 lakhs or less. So all of these are factors which are going to certainly aid our earnings expansion. The only macro challenge that we see at this moment, which is hindering the markets, is really the unusual 50% tariffs on India. I think there have been very good positive messages that have been coming up as far as the resolution of these tariffs are concerned. Even if the 50% were to go to 25%, which is still high, but an acceptable 25%, I think our markets will kind of take off. So a good necessary conditions for the markets to make a new high, I think would be this tariff reconciliation. If there would be a reduction in tariffs, our earnings are set to expand again into financial year 27. So our setup is very, very good because we've had a period of consolidation, time-wise correction for about a year. The only caveat is this 50% tariffs. If that were to get resolved, we are off to the races again.
Understood. Hi, Mr. Bhatia. This is Kanishka also joining in. Like you said, solid macros there, but tariff is the overhang that, we need to keep in mind. But like you were saying, we could potentially settle in at that 25% odd level. So if that were to happen, and you said we could be reaching new highs, do you think that's going to happen in 2025 itself? And if so, what are the levels that where do you think, the new high is going to be reached?
So I think you're absolutely right that is a precondition to us going to a new high, which is that 50% going to 25%. If that were to if that were to happen immediately, I think we are poised for a new high probably in 2025 itself, if that were to happen quickly. But if not, sooner or later, I think by the first quarter of next calendar year, we should touch a new high. How much of the rise will take place subsequently, we will kind of wait to see. Remember that our DII or local institutions, local retail investor has always been committing more and more money to the Indian equity markets. And the FI for the last 3 years or so has been actually a net seller. They have their own reasons. I think it's also what's happening globally. My sense is that globally there's an AI-based theme that is playing out, which is attracting investors to other markets rather than the Indian markets. But what I'm saying is the DI has been a consistent investor. The FIs, in case our economic momentum turns, will no longer be such a large seller, and they could also turn positive as you move forward into the next calendar year. And what kind of positivity that brings, we'll have to wait and see, but certainly a new high next year in case these tariffs were to go away.
Okay, so that's as far as tariffs and FII exodus is concerned. They've sold out substantially over the last 1 year. But Mr. Bhatia, all our viewers want to know sectors that they should invest in. So any mega theme that you are capturing in the market right now, any mega event or any other sector that you're bullish on with a 2 to 3 year time frame?
So my sense is that, if you look at it, the leadership of the market today is in the digital commerce businesses. At least that's my view. If you look at food delivery, quick commerce, payment platforms, insurance intermediaries, these are the ones which I think are leading the markets. Now, these businesses have moved from a narrative stage to a high growth phase. And because of the operating leverage, they're also hitting paths to profitability. So my sense is the attractive theme for the next 2 to 3 years will be these digital commerce plays. Also, they are not necessarily betting on the markets to expand at a very large pace because they are taking away market share from non-digital market. So they are growing at a fast pace, even though the spaces that they address are not necessarily growing at that equally fast pace because they are gaining market share. So my sense is for the next 2 to 3 years, I would bet on digital commerce companies to kind of win as you move forward and be large wealth creators. The second sector that I think is very good for the next 2 3 years may not be as fast growing, but is the telecom space, which is an extremely consolidated 2 to 3 player market where there's a lot of pricing which has yet to pan out, right? And this is a B2C business. There is great pricing flexibility in a B2C business. We've already seen close to 100% jump in the average revenue per user. My sense is there is still a lot of room for that to expand. And we have seen as that tariff expands or the ARPU expands, a lot of that ARPU increase goes to the bottom line. Given that their capital expenditure cycle is coming closer to an end or at least reducing, my sense is there's a lot of profit growth that is still left for these telecom companies. So there are two themes that I could talk about immediately is digital commerce and telecom for the next 2 to 3 years.
All right, so digital commerce and telecom, those are the two mega trends that you're spotting for the next 2 to 3 years time horizon. Thank you so much, Rajesh, for that view. On that note, we'll let you go. Thank you so much.